To calculate the break-even in sales dollars, let's look at the definition of break-even point. So that is the point at which total revenue equals total cost, or there is zero profit, meaning operating income is zero, or contribution margin equals fixed cost. So to calculate break-even point in sales dollars, this is the formula that you would use. It's the total fixed cost divided by the contribution margin ratio. So the formula for contribution margin ratio, and we have two actually, contribution margin ratio per unit divided by the selling price per unit, or you can take the selling price per unit minus the variable cost per unit if you're not given the contribution margin, and then divide that by the selling price. So it just depends on what the problem gives you. Sometimes they'll go ahead and give you the contribution margin, and then sometimes your first step is to calculate that contribution margin. So let's look at an example problem for calculating break-even in sales dollars. Morton Company sells chainsaws for $200 each. Variable cost per chainsaw is $130. Total fixed cost is $35,000. What is the amount of sales dollars needed for Morton Company to break even? So for this one, we have step one, which would be to calculate the contribution margin ratio, since they did not give that to us in the problem. So this is the formula for contribution margin ratio. It's the selling price per unit minus the variable cost per unit. So in the problem, we're given the selling price, which is $200. The variable cost per unit is $130. So 200 minus 130, and then the selling price, so we divide that answer by $200. So $70 divided by $200 equals 0.35, or we could say 35% is the contribution margin ratio. So that was step one. Step two is now go back into the break-even in sales dollars formula, where we enter the contribution margin ratio, and then we just solve. So total fixed cost divided by the contribution margin ratio. So in this problem, the total fixed cost was $35,000. The contribution margin, which we just calculated, is 0.35. And so when you take 35,000 and divide it by 0.35, you come up with a total break-even sales dollars of 100,000. Now, to check your answer, let's take that break-even sales dollars, which is total fixed cost, divided by the contribution margin. And so if we fill this in and just take out the fixed cost and leave that what we're solving for, we'll take that 100,000, we'll multiply it by 0.35 on both sides. So that clears out the 0.35 here and leaves us with total fixed cost. So 100,000 times 0.35 equals 35,000, and that is indeed the amount of fixed cost given in this problem.